We'll now move into questions, and Ms. Olson, I got to say that it's refreshing to hear you talk about your position in the Office of Advocacy and that you're advocating for taxpayers. Do they listen to you?
I think that the IRS understands the complexity that taxpayers need to live with. They are doing some research now, but they're not doing the kind of comprehensive research on taxpayer needs and preferences for small business taxpayers that I need to see. On the collection area, I think that they really feel the need to collect. They make very few phone calls out to taxpayers outbound to find out what's really going on in their situations. They often use levies as the calling card and get the call back in from the taxpayer saying, what are you doing? I can't make payroll. And there's generally a lack of sympathy in the employment tax area, which is why we're focusing so much on that area. One thing we learned was that for an account to get assigned to someone, an employment tax account get assigned to someone to actually make a face-to-face call with the taxpayer, there's usually 2 years of arrearages. And as I think the representative down there, Mr. Walker, would say, the sooner you can get to the taxpayer when the dollars are low, you have a greater chance of solving the problem and keeping them in compliance in the future and keeping the business going. But when it gets so large, like 2 years' worth of employment taxes, that's the kiss of death for a business.
My next question is, and I'll start with Mr. Walker, and you can answer it from, obviously, from your client's point of view, and Mr. Strobel from your association's point of view, your members. Mr. Culp, I don't know if it'll pertain to you, but I would like to hear Ms. Olson at the end. But the administration is proposing higher taxes for, and I mentioned in my opening statement, when it comes to pass-through and small businesses that file their income taxes as an individual or as a couple. But the president's proposed higher taxes for couples over $250,000 and individuals over $200,000. And can you tell me how that would affect your clients that fall into that that area?
The area of practice I'm in really shows the misnomer in this concept of excess of 250. Small business owners spend years developing a business, and many times they're developing it so that they can have it for retirement. They, on paper, are worth a lot of money, but they may not make a lot during the time. So they're below 250 possibly while they're operating, then all of a sudden the economic event occurs and they may sell that business for $1 million, which is designed to be their retirement. All of a sudden now, under the excess of 250, that's a wealthy individual. So it has a significant adverse impact on their willingness to even sell. And they hold out, but it will be an adverse impact, especially on their ability to have retirement funds. It goes well beyond just normal operating taxes. This is a life event that can be adversely impacted by a decision to increase above the 250.
Mr. Culp, does it pertain to you, or?
I would agree with what he said, but no, it doesn't really directly.
It would agree. I would talk about it in the context of Blue Star. We're a sub-S corporation, so all of our income goes straight through to our owners, two owners, and so any increase in tax would be a direct impact on the resources available in our company to invest, do marketing, understand other investments that we could make to actually grow the company. So it would be a diminution in the resources available to the company.
And Ms. Olson?
Well, I get to pass on commenting about rates because that's really the jurisdiction of the Office of Tax Policy, in Treasury. But I would say, our recommendation has been that you really simplify, reduce the complexity of the code, really think long and hard about what's running through the code. And if you do that, you would have a broader base and be able to reduce rates for everyone involved. And that's sort of our position. We did it in 1986. I don't see why we can't do it again.
Mr. Culp, you mentioned already some things, some specifics on simplification, which I appreciated, the 3% withholding and some other stuff. I just, out of curiosity, Mr. Stroll or Mr. Walker, you have any specifics? You mentioned a few too, Mr. Walker, but other specific things when it comes to complexity? You're talking total overhaul, changing. It's obviously very complicated now, but any other ideas and thoughts? You can couple on to what Mr. Culp said too about depreciation. Depreciation
is a significant problem. It is very complex. People do not know whether they should take a period expense and expense something immediately. So it's far beyond depreciation. If somebody's going to repair a vehicle, is that a depreciable event, or is that a period expense? You can spend hours just trying to determine how that applies. So that's a great example. Capitalization versus expensing. The issues that are a problem, especially when it comes to this depreciation matter, is that currently it doesn't matter if a business has been in existence for 50 years. You can recapture all this depreciation, and it can all of a sudden create ordinary income passing out of an S corporation when they sell those assets. That makes very little sense to me, why that would happen. So complexity added with something like that is significant.
Certainly depreciation rules, but I'd defer to the NSBA to follow up after the hearing with a lot of the specifics.
Please do. Please do. Ms. Velasquez.